All right, that is the management of IndusInd Bank. The street likes the sound of what they have to say and also the earnings, of course, which is why it is one of the top gainers. But let's now talk about the big Q today, which is that Reliance will post its Q3 earnings. And we are going to watch out for that. That is going to be around 7:30, 8 o'clock today. So Sonal is here to tell us what to expect from the oils to chemical business. Sonal.
Well, oil to chemicals business in Q3 for Reliance Industries is expected to see an improvement. It will be driven on a low base, and EBITDA is expected to see an increase of 12% on a sequential basis, majorly led by their refining business. So this time around, refining margins are expected to see an increase of 14% on a sequential basis to come in at $16 per barrel, and this will be led by improvement in cracks. So middle distillates yields and also naphtha cracks, they have grown on a quarter-on-quarter basis globally as well. Low windfall tax is something that will aid earnings as well, because that is something that put pressure on earnings in the quarter gone by. Moving on, if we talk about the petchem business, that was weak last quarter, and weakness is expected to continue for two reasons. One, because there are capacity additions in China, and also globally there is a demand headwind as far as petchem segment is concerned. But if we look at the EBITDA, which declines on a sequential basis in the quarter gone by, this is expected to see an improvement. But let's talk about the petchem segment, because it did see a decline in the last quarter, expected to continue. But JP Morgan says that margins have likely bottomed out during this quarter, and they are expected to improve from Q4. So that is a positive commentary coming in. Moving on to their oil and gas business, the exploration and production business, that is where higher gas prices will aid earnings for this segment this time around and will drive EBITDA growth, which is expected to grow 46% on a sequential basis for the company because, of course, of higher gas prices. So this segment has been firing on all cylinders in last couple of quarters, and that is something which is expected to continue this time around as well. So overall, O2C and oil and gas, both of them expected to do well in this quarter.